Good morning, ladies and gentlemen, and welcome to the Coffee with Craig show. We'll be talking about commercial real estate in Central and Eastern Europe. Good morning, ladies and gentlemen, and welcome to this special edition of the Coffee with Craig show. I'm here with the co-owner and CEO of Panattoni Europe, UK, and India. So, Robert Dobrzycki, welcome to the show, and thank you for joining us.
Thank you very much.
And we're here at your wonderful Panettone Cafe. So it's, I think to, let's say, people walking on the street, it's like Italian-style cafe, I think, with the name, yeah?
Right. Yeah. No, we're happy with it.
So you've been open a few months already.
Yeah, absolutely. It's kind of we wanted to do something different. So
Right. So the next sector to go into, I guess, will be coffee.
Absolutely. We try to challenge Starbucks.
Well, I saw some very nice cakes and also some nice wines out there as well. So we're hopefully we'll be invited for the first Panettone real estate get together.
Absolutely. And the alcohol is a secret sauce.
Right.
Coffee shop.
That always helps. Well, let's talk a little bit about, first of all, about yourself. Tell us a little bit about yourself and how you got to this position, let's say.
And obviously, I mean, I was with Panattoni since 2005 when we were growing out of Poland, expanding Central Europe, then expanding in Western Europe. And obviously we became, at some point of time, market leader. Few downturns help us to kind of become a market leader. Everybody slowed down. We were still trying to do business and figure out how can we expand and how can we be around. And feels like it's another kind of a downturn that could be helpful. That could be helpful in terms of like what we do and how we position ourselves towards the market. And 2008 helped us. COVID helped us. Hard to say COVID is helpful, but for the sector and for us was another boost. And it feels like it's another kind of a time right now that we can expect some kind of adjustments around the world from many point of view. And we feel like we should kind of on a relative basis take advantage of the situation and somehow expand and continue to be better in what we do.
Right. Yeah, you mentioned 2008. I remember 2007, 2008. Everyone was over leveraged. Lehman, of course, gone. And Panattoni was continuing sending us press releases and building more locations.
During this type of kind of a times, like 2008 or even to a different extent right now, I mean, everybody's going through a adjustment, and we are not saying in 2008 it was easy, but we were able to adjust quite quickly and move forward. It feels like this is our advantage overall, that we are very close to what's going on and we are adjusting very quickly, and it feels like this is another moment in time that obviously I'm not saying we would be continuing growing as we were growing, because we grew over the last 2 years. We doubled in 3 years. So we won't be doubling, but we would grow where probably the market would not grow.
Right. Well, I remember talking to some of your clients at Amazon and some of the other companies, and they were just saying, look, it's like Christmas every day.
Right.
They're like, sometimes we're doing more than the Christmas season every single day, especially during lockdown.
Which is exciting on one hand, stressful on the other hand, because you have stresses resource-wise and the market is overheated.
Sure.
Right now, it's obviously a moment of adjustment. The market is still quite strong in terms of tenant demand, so it's healthy. There's some adjustment on the capital side, on the interest rate side, on the leverage side. So it's making it more healthy, in my opinion, in the long run, and we can use the time to look at what we do and be stronger going forward. And that's what we do. And I mean, obviously, you go through certain adjustments. You need to kind of go through them. But I mean, like, I'm equally excited right now as half a year from COVID start and a year from 2008 to 2009. And 2007 and 8, I was excited too, but in a different way.
Right.
It was a hype, like it was in January or December this year.
Right. Well, I think also the last couple of years, when the market's doubling, everyone's an expert on the market. There's no failures, let's say, or very few.
Yeah. Everybody knows everything, and everybody knows about everything. And the office guy is an industrial guy, logistic guy, the retail guy is. Everybody knows everything, because whatever you touch, it goes.
Yeah, it's working.
It's working.
Success.
and capital is looking for diversification. Clients are looking for diversification. So even weaker vehicles are getting traction. And obviously now is definitely a time of adjustment, and we will see who will be swimming.
Right. Well, even on the consumer side, I mean, it's still growing. I think just not at 100% a month as they were always hoping.
It's still growing, and obviously e-commerce is going through an adjustment because the hype that was during COVID was just enormous, and you have to adjust from that level of growth. So e-commerce demand right now is probably softer, but we see a lot of other demand. I mean, production, nearshoring. And I think kind of having diversified pool, which is changing over time, is obviously much healthier. So, and usually we want to kind of play in all the sectors, and us being, global, but also pan-European, we are having different exposure to different sectors, country by country too. Western Europe is obviously more consumption-driven.
Sure.
Central Europe is more production-driven. It plays in a different way at any point of time. And also it plays in a different way in the capital side-wise. So this is also a strength that even if one country at some point of time might have less liquidity, less tenants, or more liquidity, more tenants, as a whole, as a platform, we are very well hedged.
Growing.
And growing.
So what do you see on looking at just Central Eastern Europe, Poland, Czech, Hungary? I know you're doing some pretty new in Hungary. I know the team there is pretty new and already announced some projects. I mean, do you see Central Europe growing on the logistics and consumer side more, or more on the production?
Well, recently more on the production side because of nearshoring. And if you want to open a second line or move a line from Asia because of your concerns regarding lockdowns, regarding supply chains, you move it to Central Europe. And depending on the labor circumstances, proximity, you choose either Poland, Czech Republic, or Hungary, or even Southeastern Europe also. So this is what's going on right now. Consumption is obviously growing, and consumption part of the Central European business is growing, but it is far behind, obviously, Western Europe. So, but that's the nature of Europe.
Yeah. And when I talk to manufacturers, and I'll ask them like, "Well, why haven't you set up anything in Central Eastern Europe? Why are you still just in China or just in the?" And they're like, "Look, we are working on it, probably with your team. We're talking to the local authorities, talking to the distribution, but of course, you can't move a production line in a day, right?"
Absolutely.
So I assume from, let's say, the days of lockdown or now 3 years ago, let's say we're even going at it, I assume you're, still working with a lot of manufacturers just now looking to come in, or just now ready to start,
I mean, our kind of production side of the business was always steadily growing. And and recently there was another kind of a push moving to Central Europe.
And I also noticed that the Chinese also want to move here.
No,
I mean, sometimes you think, oh, the Chinese will stay in China, or they don't want to. I find if they're the investors or the production, or even the Chinese producers, they're like, we want to be in Europe, Central Europe,
for the same and different reasons.
Right, exactly. It's always good to diversify a little bit.
Absolutely.
So do you think a lot of these productions will stay mainly in China and have secondary in Central Eastern Europe, or how do you see the whole market, a bit of it changing?
Obviously, I'm not a kind of a deep production specialist, and I guess each sector has its own specificalities. But we see moving from Asia completely. We see opening another line in Europe and still keeping lines in Asia. On one hand, to diversify. On the other hand, to also serve a local base. So it depends on the pattern, on the layout, but clearly recently, I mean, China became a bit more risky in terms of production, and with the lockdowns, with the centrally steered economy, it's you can't predict it.
And if you're a retailer ordering stock, you have to. This is something, or if you're an automotive factory, you can't be missing the windshield wipers, right? Or like you have wait 6 more weeks or something. Yeah,
absolutely.
So I see those kind. So shooting over to investors, when you're talking to investors, what advice are you giving them now, and also what are they looking for?
Yeah, and obviously, investment-wise, end of last year was a kind of a time. We have been still kind of transacting, but it was much slower. It was a time of wait and see. looking where the interest rates and inflation and values would end up.
Right.
Feels like there is a light at the end of the tunnel right now. You have a bit of visibility of inflation, of interest rate environment, and you can also kind of have the visibility over the values. So you can start kind of looking, if you put a bit of cushion in what you do, you could be kind of a right to end up in the right spot. And this is what I'm telling the investors is this is the moment if you kind of put it right assumptions to be on your own or have less competition. You can't be coming back when everybody will be coming back. And I think it's gonna be during the course of the year there'll be a shift from wait and see. I mean, it's happening already to kind of all in,
right?
Because people would like to, and then everybody will be on it. So I would advise that to kind of price it accordingly, obviously.
Sure.
And come to the market and start and be selective, obviously, but get into second half of the year at the right price without competition. At the right conditions. That's what I would do, and because I mean we saw it before. I mean, at the beginning, nobody, then few people are picking up good stuff, and then everybody's coming, and there's a competition. So
too late, by then. So it's more, the next, let's say, 3 to 6 months. I think people are kind of seeing the inflation and the interest rates. Okay, 3 to 6 months. They're still raising them in America, but they think they're getting close to close to the time. So now just a quick question, more broad, is how are they, what is this doing to land prices? Which is kind of saying who's taking the hit on all this, I guess.
Absolutely. I mean, the land pricing is not growing anymore. And it depends on the country we're in. I mean, and also depends on what portion of the whole cost the land is.
Right.
So in London, they adjust it immediately because it's like 50-60% of the total cost, and it makes a big difference. So obviously and it was inflated too. In Central Europe, it's less visible, but because land was cheap anyway.
Right. Okay. So if it's another euro or a lira less or more, doesn't matter so much.
In Central Europe, construction cost is the key factor, and obviously rents and kind of so this is what we see right now, that construction costs are stabilizing, and rental levels are still growing. So this is what is currently happening.
So one quick question before we finish on the construction costs, because I know you've got one foot in with the investors, one foot in on the costs and actually the producing. So in the production, but where the production costs are stabilizing, or construction costs are stabilizing, but is it labor? Is it cement? Is it metal? What's giving there?
All of that, but also during the boom time, the margins of certain subcontractors went up substantially.
Sure.
Especially the most specialized ones with the know-how.
That they know you have to use them.
Correct,
let's say.
And they don't have a lot of competition. Now, with a less construction, obviously there is a tension. So these margins would go down. So I think the whole cost will go down in terms of kind of a production elements and labor, but the margins would be slowly going down too, especially of the specialized subcontractors.
Right. Where they were, 300% higher all of a sudden. Now they're coming back to normal.
Contractors, which are kind of, I mean, they provide top quality, and you don't want to deviate from top quality.
Right.
But it obviously was coming with a margin at the peak.
And at the time, of course, because of probably consumerism at the time, you could charge clients a bit more for this. Yeah, great.
Absolutely.
Well, Robert, thank you for being on the Coffee with Craig show. It was great to see you. It's great to see the Panattoni Cafe. Always will be, we should do some cocktail parties here or something. I saw. It's great.
You're welcome.
So thank you all for watching this special edition of the Coffee with Craig show here with Robert Dobrzycki, co-owner of Panattoni Europe. We have some very nice Panattoni cups as well. So very nice. Maybe I'll just take this one with me. Yeah. Put it with my Coffee with Craig ones. Yeah. And so thank you all for watching the show, and stay tuned for the news, and we will be covering the news tomorrow morning. Click here to subscribe to the Coffee with Craig show, and don't forget to share it with your friends.